as you all know that the entire accounts are divided into three parts, that is personal, real and nominal. So now what you should keep in mind is all the nominal accounts, that is incomes and expenses, are to be balanced and closed by transferring it to profit and loss account at the end of the accounting period. But all the personal and real accounts, that is assets and liabilities and capital accounts, are to be balanced at the end of each period and is to be transferred to the balance sheet. So the difference is nothing but the income and expense of the current year cannot be carried forward to the next year. That means if a particular expense or income relates to this particular accounting year, it is to be exhausted in this particular accounting year, and the total amount of income or expense will be transferred from that particular account of income or expense to our profit and loss account in order to find out the profit or loss made by the business during the current year. But in case of real accounts and personal accounts, whenever the account is balanced, we need to find out the balance and it needs to be carried forward to the next accounting period. Say for example, I will give you example for nominal account as well as real account and personal account also. Say for example, in case of nominal account, we are having electricity expenses. So what we do is we take a particular accounting year, and when we talk about a particular accounting year, it is a period of 12 months. In 12 months, we may have to pay electricity bill 12 times. So for example, this is 2021, and if we are supposed to pay the electricity bill of 2021. So for the entire 2021, that is for the 12 months, we will be paying the electricity bill, as well as some may be not yet paid. So whatever it is, what we will do is the total expense of the electricity will be taken together in electricity account, and the total of that particular expense will be transferred from electricity account to profit and loss account. Likewise, what we are supposed to do with the real account. Say for example, in this particular year, I purchased a furniture of rupees 1 lakh. At the end of the particular year, that furniture will be having, let us say, the value of rupees 90,000, because it might depreciate by certain value. So what happens is the value, that is the balance of 90,000, will be carried forward to the next accounting year, because you are not going to throw away that furniture, you are going to use it or continue to use it in the business for the next accounting year as well. But if I compare this furniture with the expense of electricity, if the expense of electricity relates to this particular year, then the entire benefit is exhausted in this particular year, and the benefit cannot be carried forward to the next accounting year, and therefore all expenses and incomes get exhausted in this year and are not to be carried forward for the next accounting year. So just you have to keep this thing in mind. If any account of nominal account we are preparing and closing it, transfer the balance to profit and loss account, and if we are preparing account for any real or personal account, transfer the balance as balance carried down. The process of transferring the debit and credit items from journal classified to the classified account in the ledger is known as posting.